What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss the fourth stimulus check update, the stimulus package update, daily news, pretty much everything you need to know about on a daily basis. Money, investing, the stock markets, and in this case, inflation and the big news of today. And if you find these videos helpful, don't forget to hit the like button for us down below. And let's go to the big story that is just coming out here today. Yeah, and that is that US consumer prices inflation has jumped 6.2% in October, the biggest inflation surge in more than 30 years. Yeah, this is just inflation is an ongoing concern and is not getting better. It's actually apparently getting worse. You can see here the consumer price index surged 6.2% from a year ago in October, the most since 1990. Core inflation, stripping out food and energy, increased 4.6%, the fastest gain since August of 1991. Energy, shelter, and vehicle costs led the gains, which more than wiped out the wage increases that workers received for more than a month. Ouch. The Consumer Price Index, which is a basket of products ranging from gasoline and healthcare to groceries and rents, rose by 6.2% from a year ago, the most since 1990. That's compared with 5.9% from the Dow Jones estimate. Yeah, that's a lot. On a monthly basis, the CPI increased 0.9% against the 0.6% estimate. Stripping out the volatile food and energy prices, the so-called core CPI was up 0.6%, compared with the 4% expectation, the highest since August of 1991. Annual core inflation ran at 4.6% pace. Yeah. Fuel oil prices soared 12.3% for the month. Wow. Part of a 59.1% increase over the last year. Now, in a little bit of fairness there, a year ago we were in the thickness more so of the pandemic. So we're coming out of that a little bit. People are back to work a lot more per se. Um, a lot of people say that Biden and the Biden administration have a lot to do with this. And well, you can let me know your thoughts down below in the comments. But we are up a 59.1% increase over the past year. And oil prices are rising worldwide. So we are seeing an oil increase in the price of the barrel of oil, which is up over $80 a barrel worldwide. So not just here in the U.S. As well, but worldwide. Energy prices overall rose 4.8% in October alone and are up 30% for the 12-month period. Yeah, there's just no relief here in sight for any of this stuff. Used vehicle prices were a big contributor, rising 2.5% just for the month and 26.4% for the year. New vehicle prices were up 1.4% and 9.8% for the year. Food prices show a sizable bounce, up 0.9% and 5.3% for the year. With the food category, meat, poultry, fish, and eggs rose 1.7% for the month and 11.9% year over year. Almost 12% year over year. Yeah, so if you think you're feeling the pain at the grocery store and the pump, you would be correct. In a separate report, the Labor Department said that real wages after inflation fell 0.5% from September to October. So if there's ever a time that workers and families need help, it's now. The product of a 0.4% increase in the average hourly earnings that was more than offset by inflation, the CPI surge. Shelter costs, which make up 1/3 of the CPI computation, increased by 0.5% for the month and are now up 3.5% on a year-over-year basis, pointing to more reasons for concern that inflation could be more persistent than policymakers anticipate, and the annual pace is the highest since September of 2019. Quote, inflation is clearly getting worse before it's getting better, while the significant rise in shelter prices is adding to concerning evidence of a broadening in inflationary pressures, said Shima Shah, chief strategist at Principal Global Investors. The data comes as policymakers such as Fed Chairman Jerome Powell and Treasury Secretary Janet Yellen maintain that the current price pressures are temporary and related to the pandemic specific issues and supply chain issues, while they have conceded that inflation has been more persistent than they expected. They see conditions returning to normal over the next year or so. Although many people are wondering whether inflation has gotten a little bit out of control and whether inflation has gotten a little bit out of the Fed's hands.
Today's CPI report showed sharp increases in prices for meat, fish, poultry, and fuel. Will this sticky inflation spur the Fed to act soon on rate hikes? Deutsche Bank chief U.S. economist Matthew Lazzetti joins us now. Matt, good to see you here. Has the Fed lost control of inflation?
Thanks so much for having me. I think the key message on the inflation front from today was a real broadening of price pressures. You mentioned food and energy, and we've all been focused on the supply constraints, the auto sector, and we did see large prints both in new vehicles and used cars. But I think more importantly, we're starting to see it in the more persistent items. So rent and owner's equivalent rent, the shelter items were strong again this month. Healthcare inflation was actually quite strong. Health insurance inflation was up 2% month on month. And so from the Fed's perspective, this is certainly telling us, I think, that price pressures are more persistent. They are broader. They are not just narrowly focused on those categories, whether it's autos or the supply constrained items. And it's going to last longer than expected. And so we do think that the Fed is going to have to raise rates next year. They've signaled that they're going to taper through the middle of the year. And that's our baseline at this point. But if you continue to see price pressures like this over the coming months and more persistent, it may cause them to have to act earlier than expected.
Okay, so Matt, it's Julie here. So say they act earlier than expected. What happens if there are still ships off the port of Los Angeles? What is raising rates going to do?
No doubt. I think that's the biggest pushback that you tend to hear. We've learned, over time, the Fed and central banks should not be responding to supply side constraints because they can't produce more chips. They certainly can't ease some of the constraints that we're seeing on the port side. So there are very real items here that they cannot impact. They can impact the demand side. And we know that the demand side in the US has been very strong. Good spending, retail sales are well above pre-COVID trends. Durable goods spending is well above pre-COVID trends. And so what the Fed can do is impact demand, help to bring supply and demand into better balance that way. And also impact inflation expectations. If they show businesses and consumers and markets that they are responding to higher inflation data, that should help to moderate inflation expectations and therefore keep things in check and well anchored. So those are the two things that I think the Fed can do, even though, as you note, they can't ease any of these real supply side constraints.
So yeah, inflation is here to stay, at least for the time being. And let me know how it is where you are. Also, let me know how the supply chain problem is. Are you seeing empty shelves where you are? Are you seeing a problem? Do you think there's going to be a problem with Christmas shopping? Are you seeing a problem with turkey shortages for Thanksgiving? Let me know where it is where you are. Are you seeing any problems? And do you expect it to get worse? The IRS also announced inflation adjustments for the standard deduction and tax brackets here today. The IRS on Wednesday announced inflation adjustments for 2022 pertaining to a host of features in the tax code, including the standard deduction and tax brackets. The changes take into account the fact that inflation has increased this year, and the inflation adjustments apply to the 2022 tax year, which households will file tax returns for in 2023. The standard deduction, which is claimed by the vast majority of taxpayers, will increase by $800 for married couples filing jointly, going from $25,100 for 2021 to $25,900 for 2022. This is the standard deduction, which, as it says here, the vast majority of taxpayers claim. So if you file taxes, you get this as a standard deduction if you claim this no matter what. So for single filers, the standard deduction will rise by $400 from $12,550 to $12,950, the IRS says. The income threshold for each tax bracket will also rise for 2022. The top individual income tax rate of 37% will apply for that year to income above $647,850 for married couples, to income above $539,900 for single filers. Those thresholds will go up. The IRS released inflation adjustments for tax provisions on an annual basis. The adjustments are based on average inflation for the 12-month period ending in August. On the stimulus package, Democratic Representative AOC Alexandria Ocasio-Cortez fears that the Biden spending bill, the stimulus package, the American Families Plan, will be gutted. Wow. After progressives gave up the infrastructure bill leverage and the physical infrastructure bill is now passed, waiting for President Biden to still sign it, AOC was one of the 6 House Democrats who voted no on the physical infrastructure package because, well, the stimulus package was supposed to be voted on first. They made an agreement to basically pass the physical infrastructure package first, and that the moderate Democrats would vote on the stimulus package as long as the Congressional Budget Office report came back, and it came back according to plan that they would pass it in the House. But AOC fears that the stimulus package might be gutted after now the physical infrastructure package has been passed. AOC's letter here says about herself here that the Congresswoman stuck to her word and voted against the physical infrastructure bill in order to try to keep these two bills tied together, the letter said. She was always prepared to vote for the physical infrastructure bill along the Build Back Better bill, but she could not support the physical infrastructure bill on its own and risk losing our only leverage for policies in the Build Back Better bill that NY14 so badly needs. She says the $1.75 trillion framework agreement for Biden's social spending bill includes many initiatives championed by progressives, including more than $500 billion towards climate action, expanding education, and paid leave. But the proposed legislation's steep cost has drawn skepticism from moderate Democrats in both the House of Congress, including key roadblocks by Senator Joe Manchin of West Virginia. The Congressional Progressive Caucus agreed to vote in favor of the physical infrastructure bill, which is now passed, after the group of House moderates pledged to vote for the social spending bill, the stimulus package, as it is currently written no later than the week of November 15th, which is now only a few days away. The House voted to adopt the rule governing the reconciliation process for the spending bill last week in a procedural step that precedes a final vote on the bill itself. She writes, quote, "The president and the House leadership have promised that the Build Back Better stimulus package will still pass," the letter from AOC's office added. Quote, "We hope they're right. But how much of the bill survives now that we've given away so much leverage is the question." By the way, we have yet another city here considering another stimulus check here. Remember, there's cities, states, and counties going over or considering stimulus checks as they consider how to use their stimulus money, billions of dollars from the third stimulus check package, the majority of it which is still available and they just haven't used it as they're doing their budgets here for the upcoming year and stuff. So Wilkes-Barre recovery plans include a $300 check for eligible households. Check this out. Wilkes-Barre qualifying city households will receive a $300 stimulus payments if a new city program complies with federal guidelines. The Household Stimulus Initiative is one of several new financial recovery programs for which city officials and representatives of 3 nonprofit agencies provided details and eligibility requirements at a news conference Wednesday at City Hall. Mayor George Brown first announced the programs in June as part of a 9-point plan for using the city's $37 million American Rescue Plan allocation to help residents and spur economic growth in the city. Yeah, so you can see here, $37 million they're basically considering sending out to the residents of their city. So bravo. And as you can see here, there's literally cities, states, and counties are still just deciding on how to do this. And I think we're going to see a lot more of this here in the near future. You can see here, Brown expected to provide the program criteria just after Labor Day, but he's been waiting for the U.S. Treasury to release final rules on how local, county, and state governments can use the funding. Although Brown expects the Treasury to release those rules later this month, he decided to hold the news conference Wednesday because residents anxious to learn how the city will use the $37 million have approached him to ask for details. However, he cautioned that some programs might be altered if they conflict with the Treasury's final rules. Yeah, so very interesting. He also said that $3.1 million has been allocated to the Director of Resource Development. Is working to, let me see here. The Commissioner on Economic Opportunity is working with the city and the tax innovations to administer the Household Stimulus Initiative. Household Stimulus Initiative, to which Brown's administration has allocated $3.1 million, said Gretchen Hunt Greaves, CEO Director of Resource Development. Head of households who meet the income and residency requirements will be eligible for a $300 payment. Yeah, pretty awesome. Brown stressed that the payments are limited to one per household, not per person. Another initiative is just distribution of $1.1 million in grants to a nonprofit organization in the city. The United Way of Wyoming Valley will administer that program. So if you're in that area, you definitely might want to look up that as well. So yeah, I just want to let you know that there's states, cities, and counties that are still going to be doing this here in the next weeks, months, and upcoming, probably even into 2022, as they're just still deciding how to use this money. And I will keep you up to date as more and more cities, states, and counties decide how to do this. So a lot of them, they just literally just have the money sitting there. A lot of states, cities, and counties have already done their annual budgets. And you heard them say that they are waiting for the Treasury and how they can decide to use this. A lot of states have already sent out money. You know, we think about the California Golden State Stimulus Check Program, and I just did a really big video on 9 different stimulus check programs and stimulus checks and stimulus programs that are going out right now, and there's going to be more coming out here in the future. So even with this main stimulus program or main stimulus package that you think of that they're trying to finish out right now, President Biden has confirmed there's another stimulus package coming after that. Besides that, there's all these other programs as well that I'll keep you up to date here on this show, because there's other programs besides just the main stimulus package that you might think of here, states, cities, and counties, rent assistance, mortgage assistance, and other programs as well that are kind of outside of the main stimulus package that a lot of people really don't think about or know about unless you watch this show. So if you didn't catch that video from earlier with the 9 stimulus checks and stimulus programs here, I will link you to that here in a moment and you can click on that. So make sure to subscribe down below if you haven't yet and join our family of subscribers. We're trying to reach 400,000 and it's free to do so. Literally just click subscribe and it means you're less likely to miss out on new upcoming videos. Remember, the new videos come out here on our channel every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. After subscribing, you can click the bell icon that appears next to subscribe to get reminder notifications when we go live with new videos. You can also share this video with your friends and families if you want to share this with them as well. You can click here to watch my newest stimulus package video next. And this video is that video I just did with 9 different stimulus checks and stimulus programs that are going out right now. So definitely click on that if you haven't watched that to watch that next. Thanks for watching, guys, and I will see you in the next video.